All right, guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you, buddy?
Hey, man, doing great.
We're bringing you this podcast to give you the boots on the ground knowledge and experience to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate wherever you listen to podcasts. Apple Music, YouTube, Spotify, Facebook, wherever you want to catch us, please follow and like there. Show sponsors are listed on your screen below. We would not be able to do this show, run our own businesses anything without those guys. River City Title, Triumph Construction, Corlin Financial, CrestCore Property Management, and Will Griffin with Griffin, Clift, Everton, and Mashmeyer. I help buyers and sellers every day. Dean at CrestCore.com. If you like any information on how to, last week's podcast was on listing your property, if you need a valuation on your property, or if you'd like to get that buyer link where you can start to receive the houses that we source and send out, I'll be happy to send that to you. All right, man. Today, we're going to talk about I have no cash, but I want to invest in real estate. Real estate investing with no cash. There's I wrote down about 8 titles. Yeah. So there are people that would love to get into real estate and don't have the capital and the financial means that others do to get into it. And one of the popular comments is, well, I guess I'm just not ready. I need a dump truck load of cash to start to invest. Because when people hear invest, the first thing in their mind is pulling money out of my pocket and giving it to somebody else in hopes of a return, right?
Yep.
That's the typical kind of thought process, right? Pretty simple, but that's what it is. When we talk about real estate investing, there are many ways that you can real estate or invest in real estate, and not all of them include huge cash requirements, right?
Yes.
What's one of those ways that we can do that, or how have you heard this? I mean, you were mentioning before we started.
Yeah, that's what I was going to say. I mean, this is so pertinent. I just got a message from a gentleman yesterday who said, I don't have any capital to invest right now, but I want to learn. I said, man, we're about to do a podcast to talk about this very topic, about how you can learn, but you don't have to wait to invest.
That's right.
Because there are ways to access capital. And that is kind of what you said. Yes, investing is putting money out and getting a return on that investment.
Yes.
But what makes real estate investing different and beautiful and accessible for everyone is that you can leverage real estate, meaning you can use financial leverage, meaning you can use money, borrowed money, instead of equity money or money that's your own money.
That's exactly right.
You can leverage that money, and that's what we're going to talk about, the different ways to leverage that money. And we're going to caveat all this way. You got to leverage it prudently.
Yes.
But working with us, we're going to help you do that.
I started off in the similar boat. Did not have a ton of cash that I really felt like letting go of, and that might be more of the case. It might be more the case of like, hey,
absolutely,
I don't have $5,000 to my name, so I don't. We can still invest, but it also might be the case you're out there like, hey, I have cash, but I really don't want to let that go, right? It's savings, or it's my security, or it's whatever.
Absolutely,
that's more than likely the case of what we hear, right?
Great.
So that's how I kind of got started. I had a little money, but I didn't want to spend it. I just didn't want to let go of it. So I probably caught uneducated Dean. Probably cost me a couple of years in investing. Not realizing
that there were options and there were ways you could invest and keep your capital, your money over here.
Yes, even when I was selling investment deals, it just that's
good.
It just didn't click right away. So I began my first couple of purchases. I used private money.
Yeah.
And hard money, it's the same thing, same kind of rate, same kind of program. Right. I bought my first 2 or 3 with that private money, bought them, rehabbed them, and then I went to a bank. I had good credit, but I still didn't have a ton of cash, but I owned the properties. Okay, so there's the kicker. I've noticed that with banks, if you go into a bank and you say, hey, Mr. Banker, I'm Dean, and I want to borrow $150,000.
Here's what I want to do. Yeah.
They might think you got a great idea, and that's awesome. You come into the bank, you're gonna have to be really, really strong credit. They just want to see a good buyer. It's a blank slate. We don't have anything to work on. It's a blank canvas. They're just got to paint a brand new picture. If you come to them like I did, and I had a couple of houses that I'd had for several
Hey,
months.
let me show you what I've got.
That's
then,
exactly right.
kind of look. They're like, yes.
That's right.
Yeah.
You open up the thing, there's nothing in there. I got nothing. It's like, okay, well, now you want to borrow. It's just think of the perception, right? You're a banker sitting at a desk and somebody comes in with an idea and they want to borrow money, or you're sitting at your banker sitting at your desk and somebody comes in and they own something and they just want to refinance it.
Yeah, let me tell you how I got this, what I've done,
Yes.
where I'm going.
Made all the difference in the world.
Makes all the difference in the world.
So I got those 3 off of the private money.
Yep.
And I put them on 15-year notes. I got
Okay.
them for good prices. I put them on 15-year notes. And because I bought them right and I used the BRRRR strategy,
Yep.
I did not have to leave one dime into them. I was even, my first 3, I was even at 60%. So I could have, I don't advise it, could have got cash out of it. But I didn't. I just took the 60% and borrowed it and literally no money out of my pocket.
Correct.
Because I borrowed the money privately to buy it. I borrowed the money privately to rehab it.
Okay.
Okay. And then after I occupied it through CrestCore management, we got
Yep.
it occupied. I went to my bank and I refied it. Dean,
They got an appraisal,
got an appraisal,
and it appraised
Yeah.
for
35% more than what I had into it.
correct. And then you
That's
paid,
exactly
you got
right.
a loan from them, paid off your hard money lender.
That's right.
And you had
Zero.
zero in it.
And I owned 3 properties that were cash flowing and occupied with tenants. Okay. So then the next round I did, I mean, still didn't really,
Congratulations.
yeah.
That's awesome.
But that's how I got started.
Yeah.
And from none.
Yeah.
You know what I mean? So if you're sitting there with none and you get on the phone with me and you're like, Dean, you own a lot of houses. Like, yeah, but we all had
There was
none.
a day I had zero. There was a
We
day
all
I
had zero at some point.
Yeah.
So this is exactly how I got started. So then I went from the 3 and I went and started using hard money. Okay. Official, like from a company,
Yeah.
right? Borrowed again and used the BRRRR strategy again and got it up to 12 or 13. And I had gone into those where I would take 2 or 3 and I would just go refi them
Yeah.
and reset that. Got up to 13 or 14. And then I went to the bank and I asked for a line of credit. And I showed them my game plan, what I had done 13 or 14 times before with hard money. And I went to them and then I asked them for the line of credit. So we'll get to the line of credit in a second. But the hard money, that we have that here. We
Yeah.
have a sister
Yeah.
company that's a sponsor of the show in Coreland Financial. They loan hard money to me,
Yeah.
to the guys like me. If you don't have the cash that you want to spend up front, in some cases, it depends on the deal, I know, but you can borrow 100% of the purchase price and 100% of the rehab.
Yes.
So you can't tell me, this is one of the things, like you can't look at me and say, hey man, I'm a this in my professional life and I don't have a lot of cash, so I can't invest. That's just simply not true.
Yeah.
You just didn't know, and I also didn't know as well,
Yeah.
right? Until I educated myself and found that out. So go ahead.
Yeah, I mean, I think it's great when you talk about Coreland. I mean, I've got some loans with Coreland right now. And sit on a loan committee and just saw a deal. And here's an example of something that you're talking about where somebody inherits a property. They own it free and clear, but it needs repairs. They want to sell it, but to get top dollar, we talked about this last week's episode, they want to do a retail flip because they own it free and clear.
Yep.
So they come to Coreland and say, hey, I own this property free and clear. Can I borrow all the rehab money? Can I borrow my points and closing origination and my interest on it? So I've got no money in this that's going to pay it. I'm going to put a new roof, new HVAC, update the bathroom, update the kitchen, do some exterior work, and then I'm going to sell this and pay off the loan and just reap the proceeds of this inherited house. So it's an example of how it can work where you bring nothing, kind of like you did with the situation you described of you put nothing into the deal because the deal was so good.
That's right.
So
now it's deal dependent.
Yeah,
this strategy doesn't work if the deal's not there. So I mean, like all
because they're not lending on the borrower. Hard money guys lenders aren't lending on the borrower like you described the way of at the bank. Like if you go to the bank with no deal, you're going to have to be a really strong borrower that they want to lend to. Whereas you come to a hard money lender like Coreland, they're going to look at the property. Tell me about the deal. Tell me about this.
35% equity. Oh,
Okay, we can get comfortable with
yeah,
that.
right, versus a brand new loan. It's just a
Yeah.
completely different conversation. And they don't care that you use hard money to get there. They just want to see that you own property and you've properly managed them and you got the rent
And then
coming
going to the
in
bank with that.
And going to the bank with it. That's
Yeah,
exactly
which
right.
I think, yeah, go ahead.
Let's see what else we got. Discuss taking loan from hard money lender to permanent financing. We did there. Line of credit. So this is how I scaled.
Yeah.
And a lot of people go, you can find this line of credit from a bunch of different ways.
Mm-hmm.
Your own cash. If you've got $200,000 or $300,000 out there, you probably won't need any more. We can scale your business up. You could probably buy 4 or 5 a year. Okay, so if you're that person, and before you start typing, because here's what the trouble comes out of this. Before you start typing, oh, it'd be great to have $300,000. There are people that are sitting on their own cash. So if you're that person, you probably don't need a ton more. You'll be able to burr. If you're not, you might want to go after this hard money strategy right away.
Yeah.
And if maybe you're one or the other and you can get to the bank and we can start this line of credit, that's exactly how I began to really scale because the interest rates were more in the market, right? I started off with $100,000. So I did a real cheap property for them at first. And they saw, okay, he used the money wisely, did it, and then built it up over the years. And now I can do a few of these at a time. So
Yeah.
line of credit, you can get a HELOC on your home.
Yep.
A lot of our client base is from the West Coast. A lot of you guys have got equity into your home. You can go create a HELOC on your personal property and come buy homes here in Memphis. Similar to the way you do the hard money, and then take it over to a bank, pay your HELOC back off, and
Yeah.
rinse
And I've
and
talked
repeat.
about that a million times. That's how I started here.
That's how you got
on my
going.
personal residence, had some equity from the initial down payment, had some appreciation, and had some principal pay down over time. Back when the banks were giving away money, they would do 100 to 100% at home equity line. So I had a little bit more than the 80% they do these days, but got that equity line of credit on my home. And then you just use that the way you used your hard money lender.
Yeah.
Bought a house on the line of credit, fixed it up on the line of credit, got a renter in there,
Yep.
took it to the bank, put it on a 20-year note, got the money back, paid off my line of credit, and did it again. Went back out and did it again.
Yeah.
Went back out and did it again. And then I got into the kind of the way you were talking about with the burr, where, I mean, it's a similar concept of where you just permanently finance it or burr it, refinance it with the bank. And then you can do that on package deals like you did with those 3.
Yeah.
So
Yeah, I hate to bounce, but I want to go
Yeah.
back to the hard money for a second.
Yeah.
Talk about the loan approval process.
Yeah.
I just
yeah, it's great. I mean, what hard money lenders want to know is they want to know about the deal. Tell me about the deal, the house.
versus
Get me
a banker.
comfortable.
A
They
banker.
they only
wants you-
care one about you, your tax returns, your personal financial statement, your job history.
Do you run credit at Corlin Financial? Do you guys run a personal credit report?
only on a long-term loan,
Okay.
not on short-term loans, which
Okay.
we're talking about here
Yeah.
is primarily short-term loans.
Yeah.
Corlin will do a permanent loan
Yeah.
if you don't want to do a permanent loan with the bank.
Yeah.
But most people want to do a permanent loan with the bank. Anyway.
Yeah.
So they don't pull. They don't have to pull credit because they're not. It's
the
just a
asset.
short-term loan. It's an asset-based loan.
Yeah.
Yeah. You're just doing a quick loan. So tell me about the deal. Tell me a little bit of information about your experience, what you're doing. Is this a rehab? Is it a flip? Is it a
So
buy
I think
and
that's
hold?
important to know that
Yeah.
the approval process is completely different from hard money and private money in a bank, obviously, right? The hard money, you're telling me that the main thing you're looking at is the property that the investor's bringing
Yes.
in. Obviously, because if they don't pay, you're stuck with it.
That's right.
Right?
Yeah.
If you want that house to be in a good area, in a good location,
Yeah.
and have some good numbers to it. Banker they're not in the real estate business. They don't care one thing about the property. They want to know that you can pay for whatever that is over there. They do no research. If I'm right, I've never.
No.
Now that I've gotten up to this count, they kind of like, hey,
Yeah.
where are you at? What are you doing? Like, but my first feeling, they're not asking me anything. They just
No.
want to know that I can pay for it.
That's right. They'll get an appraisal, put it in there, but that
Yeah.
is but yes, it's apply. There goes a review process. You close it. You repay the loan.
Yeah.
And you do it again.
Do it again.
So it's a repeat there. So it's a simple process.
Private money and family money is kind of the same thing. That's another way that you can borrow money or use money
Yeah.
from someone else. I know you probably have got some scenarios.
Absolutely.
With this, but
Still
private
do.
money and hard money or family money. If grandma or grandpa are sitting around with a bunch of cash and they like to earn more interest on it, I mean, I would take a business plan, obviously, but I mean, family's a little bit different, but private money, I mean, any private money, if you take up this to them, I've seen guys go to just private individuals that have nothing to do with real estate whatsoever, but don't mind getting a good return on some of their money. And they have grown their business portfolio through private lenders like that.
Yeah.
So you can find them. I would be cautious on who, you just go out into the public and start asking people, right? But family money and private money is the other way you can go.
Yeah, it's great if you have access to it. I mean, an example, again, it's a case-by-case basis, and you want to have the experience and you want to have the relationship. Obviously, you don't want to put anybody in a bad spot. But just to say, for example, let's say you have a parent or family member with a free and clear house. Mm-hmm. They might be able to go get a home equity line of credit on their house. Mm-hmm. Say they own a $500,000 house, and they go get a 50%. They get a $250,000 line of credit on that house at 7% interest rate.
Charge you 10,
and they can charge you 7 or 10. I mean, it depends on what your relationship is.
That's right.
And again, you can access it if you don't have the capital. If you have that relationship, again, it's a case by case basis. But I've seen it. Yeah. I've used it in scenarios like that.
Yeah.
And
if you're worried about payments and things like that, your title company will do it.
Yeah.
If you're worried about amortization schedules and things and how do you work those things out, a lot of times your title company will put that together for you.
Yeah, there's a lot of different ways to do it and to utilize the best options that you can.
So don't call me or email me and tell me I'm broke, I don't have any money, I can't invest. We just spent 15 minutes here kind of telling you how you can invest in real estate with no cash. The burst strategy is likely the only, the best way to do this.
For sure.
And you can keep that down payment, with the forced equity. But I think it's great. I think there's plenty of other ways that if you have a different direction that you can take financing, I'm happy to learn about it and know about it. But hard money, private money, lines of credit are all ways that you can invest in real estate with no cash out of your pocket.
I'm gonna ask one more just to close it on there. Have you had buyers come to you, borrowers come to you, and to build capital flip houses?
Yes.
So I don't have any money.
That's what I've done.
I don't have any money. Mm-hmm. So I'm going to try and find a really good deal. I'm going to borrow hard money to purchase the property and fix it up. And then I'm going to sell it.
Yep.
And I'm going to walk away with $20,000 or something like that.
I flipped a 16 unit and used Corlin Financial. It was over $1 million property. So
you walked away with a chunk of change after that.
And used none of my money.
You used none of your money, but you were able to build up some capital through real estate investing by using hard money to then fund your buy and hold business, to have some capital for your buy and hold business.
I went and flipped that big multifamily property and took the property and just went, and I've done 2 of them through Corlin.
I remember.
And used that money to fund the buy and hold business. Yeah.
Yes. And you see people do that. So that's another one. That's another. If you don't have a rich parent or an aunt or somebody,
can't get the line of credit or whatever.
You can. That's another strategy of flipping houses to build capital, using hard money to flip houses to build capital.
I'm thinking of an investor in my head right now that did it here. He's flipped houses and he buys long-term buy and holds from the capital that he makes from flipping.
Yeah.
It's a little slower process because he's got to have the cash from the flips, but he waits, he flips, and then here comes another long-term buy and hold. So there's ways that you can do it.
The whole point, when you were closing saying, don't tell me you can't do it, I'm like, okay, here's another way to do it. Here's another way. There are ways to do it. We've seen it all. This is what we do all day, every day. People love it. We love to help people. Dean at CrestCore.com.
That's right.
Baby.
Any questions you've got, Dean at CrestCore.com about how you invest with zero money out of pocket, just shoot me an email and I'll get you on the phone. Anything else?
That's awesome.
Okay, guys. See you next time.